Hello, hello, hello. Okay, I hope y'all can hear me. All right. Before I begin, I just want to give y'all a huge thanks. My scripts are out. So I had them out before, but they were hidden because of the house rules. So that's why I like how to change them. So, but anyways, the time frame clock is out and the volume clock is out. I'm gonna do a video over these two later on, but this is just my top three. So right now, the first one I'm watching for the week is Disney. So Disney, right? So yeah, right, the whole market, right? It's still March. So March is still a bearish month. Like it's still like it was just looking at in the past, March, it's like it's mostly a bearish month, right? So well, I'm seeing on this just based off the daily time frame and look at where we are at. Like we broke under $100, right? $100 is that mental. It's that whole number, right? And we like whole numbers, right? We're humans. Like we like you don't want half of a pie, right? You want the whole pie. That's pretty much the same. So, but with that being said, right? This gap goes all the way down to $92. So the moment this jump crosses under 98.41, I think Disney is going to keep falling to 92. And like, yes, they have the streaming services, the parks, but let's be real, who's going to a park right now? Right? Unless you're like super rich and you have like nothing else to do, right? You're not going to be going to a theme park every single day. I mean, you do have people who do that, but like that's their hobby. But I'm talking about like the average American or the average person. Anyways, just based off the chart, right? We're in a downtrend. We came up, we filled this gap at 110, came down to 101, up, right? So right now we're making lower highs and lower lows. So, but since we're in this gap, I know people probably bought when we broke under 100. They probably like bought and you had like shorts too. So I honestly just wait for this one to set up because I'm pretty sure because it has, yeah, for this gap here at 102, it has this gap at 105. So if we do get a bounce in the market, obviously it's gonna go up to 105 first before going back down and filling this gap. But I think we fill this whole gap first because it's a gap and a gap. So we have this giant gap and we have this gap right here at 94 that I just saw right now. So honestly, under 98.41, I'm looking at 94. And then from here, we can bounce back up and reclaim 100. And if we don't break under 100, then price could just fall back down. So pretty much what I'm seeing, break, retest, fill gap, we do this, go sideways, and we either go back up to 100, test that, fall back down to 92, or, you know, break under, yada, yada, yada. Same thing, sideways action, blah, blah, blah. Break under 100, go up to 105. And then from here, we could fall back down. But just based on the whole like market and the thing going on with Iran, like I'm being cautious on the long setup for Disney. I'm not saying it's not there, but I'm being patient on this because when it broke under 100 now, it's just trading sideways. So on Monday when this daily candle opens, it should confirm which way we go. But that's Disney. Next one is Exxon. Exxon Mobil, oil still bullish. Like even looking at CL, like oil, like it's just pausing, bro. It's taking a break. You gotta realize this junk has been moving up. Like it's just pausing. Yeah, all through March, like it went up to 114, came back down, and now it's slowly building back up. Like they're just a sideways action right here because it's building a base. It's trying to find a base because it's probably gonna break out. Like, and you heard what Trump said: if the straight doesn't open in the next 48 hours or whatever, they're gonna like, you know what they're gonna do. But regardless, on Exxon, like just we're pretty much at war again. I don't think it ever went away, but just keep Exxon on watch because like it's oil, it's backed by oil. Like just keep the stock on watch. I'm not saying buy or sell, but you always want to have this on your watch list just in case because all it takes is one tweet, oil booms or oil tanks. But for me, it has a gap to fill at 158.49. So if price can come down in this gap and hold this gap and trade sideways, then, that's an easy long back up to the high of 162. Because truth be told, this is the overall. If we ignore this gap, this doji candle right here is like the last low before price gapped up, right? So as long as we maintain above this candle, then we should just make a higher low. If you ignore the gap and pretend a candle was actually here, that's how I'm seeing it. And then at the overall trend, just look like from this base, we had this 1-2 right here, and then this impulse out, we broke this high right here, came back down, right? Faked out, pop back up above this doji, uptrend, higher low, right? High low, overall high, higher low, right? Higher high. This is a higher high. Why is this a higher high? Because we broke this high, right? So since we broke this high with this higher high, we should make a higher low. So that's what I'm saying. Like in the area we should make the higher low at, it's like in here. And then if I draw a fib on the overall move from this low, I guess to the high, no, the point 50 is at 158.66. So, like I said, as long as price doesn't break back under this candle right here, this small green candle, then we should bounce. Should is a key word. Should bounce. And yeah, but that's XOM. And this, I'm gonna get over these tools in a second. This is a time clock. This is a volume clock, and this is a volume wheel. So the first time frame I go to is the first slot. These other two I can change to whatever time frame I want, and it just takes the live volume. So the current candle, the negative 1 through 9 are the last candles in the past. So for example, on Exxon on the 15-minute time frame, right? This candle had 781K volume on it, right? You see it right here, and it closed green. So this green and up candle just means the stick closed bullish, or I guess green. And then like the red means it closed lower. The close was lower than the open, right? For the green sticks, the close is higher than open. That's all it means. Like, it doesn't mean bullish or bearish, and the gold just means like, hey, a ton of volume just came in right now, right? Like anytime it flashes gold, like don't have a bias. It just means like, whoa, like it just means like a ton of money just came in on that candlestick. I should have probably added like a time. Oh no, I don't want to add too much of that. Anyways, yeah, Exxon. Like it looks like if it can come down to this gap and hold, like that's a good trade to me. Cause like I said, I don't think it's done. It's just pulling back. And in order to go higher, you have to go lower. In order to go lower, you have to go higher. That's why you always see like the last red candle before this giant impulsive buy, or the last green candle before the sell off. Like you just have to wait, because the market will always show you what it wants to do. And that's based off volume. I don't have the volume spread for VSA tool on. I thought I did. Uh oh my, what happened? Oh well, I'll fix it later. I don't really need it on, but I do want it on now. I want it on now. There we go. There is my tool. Well, not my tool, but you know what I mean. Ah, I love volume. All right. Last but not least is Apple. So Apple, right? Apple, this Friday candle closed at a doji candle, right? So pretty much they ain't so pretty much the market, the bulls and bears, they're at an equal point. That equal. So this one, honestly, you just have to mark out the high and low of this doji stick. And I guess, and if you want to mark out the open, you can. So at 247. So this one's pretty easy. If we break back above 249.09, just based off the daily, you're looking at 251.83. But I think we come lower. I think because we had a doji here, right? But if this next candle, because I think it might fake out to the upside and then turn around. So that's why I'm gonna mark out this high. because we have resistance at 240. Well, we have support at 244 and 243, and there are stops under here. And not only that, but there's also a gap down here as well. If I go to the 1 hour time frame, this gap right here. So price has a gap to fill at 239. Why did they do that? I'm trying to get a red on candle. Yeah, so right here at 239 to 238. So I think price comes down and it fills this gap first before it bounces. And it makes sense because we have these lows right here and this money right here. I think we come down before we go up on Apple. And the only reason I'm saying that is because of this doji stick right here. Like this stick had 88 million volume on it. But do you see the size? It has to close green, but do you see the size of this stick? 88 million volume on this daily candle, on Friday's daily candle. And it only closed as a doji stick. Like that makes no sense to me. This next stick only had 34 million, but this one had 88 million. So that's what I'm saying. I if it breaks under 246, right? And fails to hold, that's an easy short down to 243 and probably down to 238 to that gap. But I'm not, and yes, I know there's a gap up here at 259, but do y'all see the overall market right now? And with this stuff going on with Iran, like don't like I want to like this looks good to go back up to 260, but at the same time, we're close to these lows at 244, at 243. And if we break these two lows right here, then yes, I can see 238 on Apple. So that's why I'm like, why would price go up here if we're close to these lows right here? And under low is what? Is orders, right? It's stop losses, it's money. So that's what I mean. I think we come down. That was my one, but I think we come down on Apple. So pretty much under 246, right? I'm looking at 238. I'm looking at that gap to get filled for Apple. And it might bounce up on Monday, but honestly, the break of 246, the break of this daily doji candle, this junk is gonna confirm. And if that doesn't confirm Monday, it's gonna confirm sometime this week. But that's it for me, and I'll see y'all in the next video.